15 for 15. I am your host, John Zalkin from RKW Residential. 15 for 15 is a new and exciting video series where we interview 15 influential real estate people for 15 minutes each, where we will get their perspective on what is happening in real estate during COVID-19. A little bit about RKW. RKW Residential is an award-winning third-party multifamily property management firm with over 20,000 multifamily units under management and a growing footprint spanning 6 states. RKW delivers expertise in multifamily management through its technology, marketing, and customer experience platforms. My guest today is Jacques Bessoudo from Galium Capital. Jacques is a co-founder and managing partner of Galium Capital, a commercial real estate private equity group with over $400 million in assets under management. He is actively involved in the acquisition, asset management, development, and disposition of real estate properties across the U.S. In addition, Jacques oversees the property management of over 200 single-family homes. Jacques, it is great to see you, and thank you for taking the time to join me on this episode of 15 for 15. I'm looking forward to getting your insight on the real estate market today. Can you please just briefly expand on your bio, and then we'll jump right into some questions.
Of course. Well, thanks for having me, John. It's good to be here. So we are at Galium Capital. We are an investment firm very focused on wealth preservation. Because of this, we have a very defensive portfolio. It has always been our strategy. Like, we don't go for crazy returns. We're very focused on wealth preservation. We have a very defensive portfolio. Around half of our portfolio is multifamily. The other half is mainly office and a very few retail properties in very core locations, diversified service tenancy. We do value add mainly on the multifamily side.
Perfect. Well, I was excited to have you on because you are in 3 different facets of the real estate market. So to get your insight, not just on as well as the multifamily, but also the office and the retail, I'm pretty excited to hear what you're seeing. So just generally overall, what are you seeing today compared to, where we were? We were just talking, I think the last meeting I had before COVID-19 was in your office. We were just catching up and talking about some business and some deals. So, going from there to today, I know we got our April collections in on everything. So just run us through on a 30,000 foot overview of what you're seeing throughout your portfolio, and then we could dig into some of the details.
Sure, of course. Yeah, as you say, there's a lot of volatility and change in perception, right? Every single day you hear different pieces of news, and the general mood and investment mood changes so rapidly. In what we are seeing is very different by asset class, of course. In what we own on the multifamily side, really April was much better than across the board. April was much better than expected. In multifamily, we collected, in absolute dollars, more rent dollars than what we did in March. So April basically not affected in multifamily. In office, almost not affected as well. Basically, business as usual. Tenants are closed for the most part. Our offices buildings are still operating, but a lot of working from home, and tenants are still paying rent. And in the retail properties that we have, we've collected about 70% of rent. This is very small businesses, service oriented, all of them. So the ones that haven't paid truly have had struggles to stay open and pay rents. In everything that we are seeing across the board, we think if it's issues, it's going to be for sure it's going to be an issue, but it's going to be a short-term issue. We believe that April is probably not going to be the hardest hit month. May and June, especially as unemployment keeps going up, are going to be worse. Remember that the big unemployment claims came in April after people have not already paid rent. So we are expecting that June and July are going to be the toughest months, but nothing. Hopefully this doesn't aggravate more, and it's not a longer-term issue.
So it's interesting. I was on a call this morning for a panel I'm on. I'm not the interviewee. I'm not the interviewer. I'm going to be the interviewee. And I was on with some very influential multifamily guys. And, kind of the consensus was I was very bearish in the beginning, and then I became somewhat bullish a little later on as April came in and started seeing it. And, when you look at the stimulus checks, that's a one-time payment. But if you look at unemployment, just Florida, where we're sitting, it was $250 a week, plus the government's giving 600 more, the federal government. So a lot of people are getting larger checks. Now, granted, it only goes to the end of July, but it's I think maybe that's going to help us out through May and June. And July is people are earning a decent amount of money. I also don't think in an election year they're going to stop the money coming. I think both sides are going to fight for that to keep it going. So I'm hoping the optimistic side of me, as I've spoken to a lot of very smart people, are saying that. Now, the other side of me is saying, well, wait a second, if I was in that position, would I use that extra money to pay rent, or would I tell the landlord town saying you can't do anything to me and build a war chest so I can have some money to go elsewhere? So I'm wondering if you're seeing anything like the little tip signs we're looking for is the automatic payments, the ACHs, the automatics. We've seen a decrease in those where people didn't realize they were on in April, they didn't think of it, and now for May they've shut it off. Have you guys seen anything like that, or people coming to you for payment plans or anything like that, getting out in front of May?
So in retail, it has happened a little bit. Some tenants that have reached out asking for forbearance or deferral that don't really need it, and that can't prove like. And once we the first approach with them is to try to guide them to the government aid that was approved. Of course, it has PPP run out of funds, but like initially, this is money that they had access to that we didn't, right? So we guided them. There was hard to find other tasks that our team would be rather investing their time on than helping tenants get government funds so that they can pay rent. So a lot of that we did. In office and in multifamily, we haven't seen that yet. We even like in multifamily, a good example, we established a policy of no credit card fees, just to incentivize the person that does want to pay and doesn't have the cash flow. We would allow to pay by credit card, and really not a lot of them took advantage of it. So multifamily, and maybe it's the segment where we're multifamily B plus and A properties, and that is the one that has been affected the least. And MHC published numbers of percentage rent collected by the 12th day of April. And overall, it looked pretty well. 90% of rent had been collected, but the numbers were much better, or 97% probably, if you looked at A and B only. Yeah. So, because I'm sure if you look at C and workforce housing and that level of the asset, you're going to see more of what you say, but we haven't seen a lot of that yet.
What's interesting is the office. Have you seen strong collections in the office? I know it's not a huge part of your portfolio, but I know you have substantial office assets. We're hearing from I'm hearing from some lawyers I know and people like that they're just not paying rent because they want to save their cash. So it's good to hear that your tenants aren't those people and they're collecting, and you guys are collecting the rents.
Yeah, the part of the office portfolio that we have is mostly very boutique office buildings where we have good relationships with the tenants and we're very close to them all the time. And many of the cases they're the owner that we're dealing with. So maybe because of that, and they feel the personal relationship and they have decided to pay. Again, it was April. I'm sure that in May and June we're going to have much bigger issues.
So let's talk to the next thing. I know you're big in acquisitions and you're a deal junkie and you love looking at deals and chasing deals like we all do, right? It's like that's the bonus of our profession. What are you seeing out there? State of the market, debt, equity, on your side. What are you guys seeing today?
Yeah, we're seeing a lot of frustration because there's still a lot of people that are interested in deploying capital, and more so now they're looking for distressed opportunities that are still not here. I think a lot of the people, all of the investment people in the industry were waiting for a moment like this where the price adjustment would come for the last few years. Because in the last few years, really, very, very few people were able to deploy the capital that they wanted to deploy, right? Like there were just not enough good deals. So a lot of frustration because people are expecting those price adjustments to come soon and they just haven't. we have seen some price adjustments in some assets. In multifamily, you can probably buy something 5 to 10% cheaper than what you could have probably bought before this. But really, the bargain price and the distressed opportunities are still not here. So I think people are frustrated that nothing is happening. Not even in traditional market prices, because of I think mainly because of the debt situation that has changed a lot. Right now, if you wanted to get a Freddie or Fannie loan, it's possible, but their conditions have changed significantly. They're asking for like 5 to 10% reserves. Because of that, underwriting is much tighter. You're much less proceeds, tighter underwriting, worse returns overall. So even under normal pricing conditions, not a lot is happening right now. I've seen some more creative solutions where people are starting to get into buy-in debt or going into the mezz or pref equity side of it for distressed properties. But at this point, I think it's still a risky move, and it's just a small portion of the market.
Yeah, no, I think everything's at a standstill. I think everyone's waiting, which is interesting. I don't think anyone really has a handle on where we are today. I was on another call today with a big fund out of New York, and they're, everyone's searching, but no one really knows what to do. Everyone's the first one that was scared to jump in the pool. And I think a lot of them, the distress side, the note holders and things like that are, well, I don't have to sell yet. But I think come summertime, the next 3-4 months, I think that's when you'll see some shakeouts and deals will start happening. I know we have a client that was closing April 17th, a huge fund, and a big monster institution, and it got pushed to April 30th, but they're still closing. It got pushed. I mean, let's see, hopefully it'll close. 3 assets in our portfolio got traded already. So deals that were on were closed. I heard this morning there was Blackstone walked from a $20 million, a deposit on a monster portfolio out in the West Coast. But I think they're thinking, is it a 5-10%, like you're saying, discount? Why go ahead and do it? So I think we're in trying times, but I think the opportunistic people and the people who were smart will come out of this just fine. So as I told you, 15 minutes flies by when we're having fun. So we now move on to the favorite round of everybody's, is the lightning round. You ready to jump into the lightning round?
Let's go for it.
All right. Quick questions, yes or no, or over or under. Does the 10-year treasury close over or under 1% by the end of the year?
Over.
Next time you're on an airplane, over or under 90 days?
Under, but tight.
Next time you attend a networking event, over or under 90 days?
Over.
Next lunch or dinner at a restaurant with a client, over or under 90 days?
Over.
Will Trump win or lose?
Win.
Does the stock market end over or under 20,000 by the end of the year?
Over.
Does the U.S. COVID-19 infection rate go over or under 1 million cases in the U.S.?
Over for sure, sadly.
Yeah. Do you think you'll be on a vacation in the next 6 months?
Probably, yes.
Jump back to me on the 10-year. That's how interesting that they think it's going to go over. So you think money's going to come out of it?
Yeah, the 10-year, I mean, you have basically, if you didn't think so, you would be saying that this thing is going to last till the end of the year, right? Short-term rates probably are going to stay unchanged for a while, but the 10-year, I think it's not going to last until end of 2020.
So lock in your debt if you can, right?
Right. Exactly. Well, the spreads are larger than usual, but yeah, it's still a good time to do it.
Jacques, thank you so much. I really want to say thank you for joining me on this episode of 15 for 15. That was a lot of fun.
Thank you, John. Thanks for having me.
Everyone, we hope you all stay safe and practice social distancing, and make sure to wash your hands. If you have any questions or would like to find this video, please visit rkwresidential.com.